Talk about what we might see tomorrow with Delano Saporu, founder and CEO of New Street Advisors and a CNBC contributor. Great to see you again. You have been pretty patient waiting for a moment. I wonder if you thought today was the beginning of one.
Hey, Carl, great to see you as well. I think, today obviously was a wild trade day, a massive rally. Investors were looking for some positive news, and we got a little bit of that positive news when it looks like we have obviously core headline CPI numbers, lower than expected. So that was, a positive news for the market. Now, looking forward, I don't think we can get too exuberant yet. I think there's still things on the pipeline that have to materialize for investors to think that this is actually a rally that can sustain in this current bear market. We have, some PMI numbers that will obviously come out. We also have, job numbers. We still have a very tight job market. And that's something the Fed has pinpointed as one of the data points that they're going to be looking at. So, the exuberance, I kind of missed, many investors probably missed this one-day rally. If you're being cautious, that's okay, because there's still more to be seen.
Right. Now, earlier in the year, we had a lot of discussions about bloated inventories, and sure enough, goods got a little bit less expensive this time around. Now we're talking about corporate layoffs, and I wonder if you think that is also down the road going to result in a cooler labor market and maybe some relief on that front in CPI.
Yes, 100%. Of course, that would translate to that. And I think the one area where it translates is, of course, demand. You're seeing, with corporate earnings in our Q3 earnings, which was obviously negative year over year again this past quarter, that companies are guiding that demand was down, and their forecast is that demand will also be down in the next couple of quarters. And so when you have that coupled with, what we're seeing in some of the inflation numbers, we are seeing trends that are positive. Have we gotten to the areas where the target is for the Fed? We obviously haven't gotten there yet, and there's still ways to go, but there are positive trends for investors to hold on to.
We spent a lot of the hour tonight talking about crypto, obviously much of the day as well. To you, does it feel like a very intense fire, but one that's in another room and separated by a firewall? Or is there enough margin call risk that maybe it could have some impact long-term on stocks?
Yeah, I think that there's some contagion there. There is a little bit, especially if you look at just this overall sentiment, especially within younger investors, when you're seeing bigger firms that, have $32 billion valuations in the private market go under in a matter of a couple of days. That's going to, change sentiment a bit, especially not just in the crypto markets, but I think generally in growth areas as well in the stock market. So that contagion is going to have selling pressure for sure in the crypto market going forward. And I think the sentiment has changed. A long-term bullish. I think it makes the big players, the two big players, if you look at Bitcoin and Ether, stand out a little bit more in this area, to me, specifically. And, just in general, I think, investors, we saw a lot of over leveraging and different things happen in 2021. That is a lot of that bearing to fruit now in 2022. And that's, unfortunate.
Right. Finally, staples for the quarter are beating consumer discretionary by like 16%. And I wonder, are you still in staples, or do you want to take a flyer on more growth areas?
So, yep, still in staples, obviously overweight on growth. All investors should have, a diversified portfolio. And you're going to get those areas when times like this where it'll perform relatively better. And that's good for people that are overly overweight in staples. And that's something that, you're seeing here in 2022.
Delano, great to see you. I'm sure we'll be talking in the days ahead as this market keeps getting more and more interesting all the time.